For brand new traders and investors who want to understand how to trade stocks in order to grow your retirement savings, the most fundamental question that gets asked is this: what stock should I focus on, and when should I enter a trade with it? It's really exciting to finally make that commitment to get involved in investing and trading. And because it's never been easier than ever to open an online trading account somewhere like TD Ameritrade or Robinhood, many new traders are far too quick to fund their accounts and then start clicking into trades without really making any educated decisions as to what they're doing and why they're doing it. I'm glad that the realm of trading and investing has been getting easier for everyone to access, but it's really important to first understand how to trade stocks properly and also learn what factors drive a stock's price to move one way or another so that you can make an informed decision. If you're starting out thinking that your stock trading choices are just going to be based on your gut instincts only, then I'm afraid to tell you that you might get lucky once or twice, but your intuition alone is not going to carry you for the long term. The good news is there's a variety of ways to evaluate your trading decisions. There are methods out there that will guide you for making the best judgment calls about your investing. These are boiled down into two primary categories called fundamental analysis and technical analysis. So join me for this video and I'll summarize what these and other related concepts mean and how they relate to you for your trading style and goals. So let's break this down together right after this. Hi everyone, this is Dan here from the Joyful Trader channel, where I always encourage you to learn how to take control of your own savings and investments by learning about trading. Even if you're totally brand new to investing and trading, young or old, you're always just the right age to start to learn. So in this channel, we talk about all kinds of things for beginners who want to learn more about the basics of trading and investing. We also talk about improving our lives, which includes how to maintain a joyful attitude all along the way. We always keep it positive, we keep it upbeat and easy to understand. So if you're brand new here, I invite you to become part of our growing community of traders that are all in the process of learning. Just click here to subscribe to this channel and then hit the like button if this video has helped you in some way. And as always, you can catch me over here on social media. So let's talk about the concepts that will help us to understand how to trade stocks. Understanding how to trade stocks starts with knowing what it is that you want to accomplish by learning about it. In a previous video that I made about learning how to trade for beginners who are absolutely starting out, I stressed the importance of first knowing the reasons why you want to trade and invest to begin with. And this starts with creating a very specific set of goals that are realistic and how much time you have available to learn and actually engage in the market. For many of us, we work full-time in our jobs, but others may work only part-time or as stay-at-home parents, and you might even still be in school in some form. And with each of these situations, combined with your specific trading goals, that'll help to dictate what kind of trading or investing style may work best for you. If you haven't watched that video, I almost recommend that you pause this video first and then go check it out. I'll post a link to it up above here in the card, but I'll also link to it at the end of this video. In the broad umbrella of looking for stocks to evaluate to potentially trade or invest in, there are two important ways to analyze the facts and data surrounding what's happening with a company's stock price. And the first way is called fundamental analysis, and the second one is called technical analysis. So after I describe what these two methods are, later in the video I'll talk about how they fit into different trading and investment styles that are relevant to you and your goals and your time availability. Since I'm not only a trader but a surgical nurse in a large hospital operating room, I'll use doctor-patient metaphors in describing the differences between fundamental and technical analysis. Let's start with fundamental analysis first, since it describes all of the foundational information that relates to any given company. Now, this term is sort of what I call the 30,000-foot viewpoint of a company. The data it contains within fundamental analysis is the big picture stuff that make up who the company is, what they do, how well they're doing it, what their plans are now, and what their plans are in the future. How much are they earning? How much cash do they have in their savings to do stuff with? What's the value of their tangible equipment? And are they meeting their financial goals and expectations? This method of analysis is typically used by traders or investors that are more interested in a longer-term investment strategy, such as, holding a company for a year or more. I sort of equate fundamental analysis of a company as to how a patient's health has been over the course of months or years. For example, if you see your doctor once or twice a year, the questions they'll ask, particularly if it's your first time visiting a new doctor, may be ones like, do you smoke cigarettes? Did you ever? When did you quit? Do you exercise and how much? What's your diet like? Are you overweight? What health issues run in your family? Do you engage in risky behavior? And other broad questions like that. The answers help to give the doctor a glimpse at a long-term picture of how you've been doing and if you're a potential risk for certain health issues going forward. They don't necessarily tell us right at this very second how you're doing, but they help to give us a sense about whether you're veering off course in the last few months or in the last year. It also tells us if you're doing the right things that are maintaining a healthy lifestyle right now. Even though you may have had health issues in the past, you may be doing all the right things right now in order to prevent future problems, which is a good thing. This is like fundamental analysis of stocks. It won't tell you what the price of a company's stock is going to be tomorrow, but it'll give us a sense of the overall health of the company in general terms. And speaking of terminology, some of the terms that you'll see being used in fundamental analysis include earnings per share, price to earnings ratio, projected earnings growth, price to sales ratio, price to book ratio, dividend payout ratio, dividend yield, return on equity, and my personal favorite word, EBITDA. EBITDA. Well, that just basically means earnings before interest, taxes, depreciation, and amortization. This is a big factor that many long-term investors are concerned with, so you'll hear that word come up a lot in financial conversation. These terms and concepts of fundamental analysis are like the broad view questions, though, that your doctor asks you each year or every quarter. They're just a litmus test to determine the general health and strength of a company now and going forward. Now, I'm not going to get into detail about what each of these terms really mean and how they can be used in making trading decisions in this video, but that will be the topic for another specific video. The important point that I want you to understand about fundamental analysis is that it represents an overview of a company's health and medium to long-term projections about where it's going. It describes the fitness of a company based on longer time frames ranging from months to years. Fundamental analysis can also attempt to calculate what an appropriate price for a company's stock should be. For an oversimplified example, if a company is worth $1,000 and they've issued 1,000 shares of stock, well then theoretically each one of those shares should be worth $1 right now. Of course, it's not as black and white as that, but fundamentalists will use many of those terms I mentioned earlier to try to calculate what the real-world stock price should be. But if that were really accurate, though, then stock prices would always be correct at all times, right? And they would never fluctuate. But stock prices do oscillate day to day, hour to hour, and minute to minute. And the reason for that is, although maybe a stock price should be at a certain value based on fundamental analysis, the price at which it trades is really just a reflection of what traders think the price is going to be based on where they think the company is headed to in the future. In other words, speculation. However, the usefulness of fundamental analysis can't be dismissed because it plays a significant role in the way that the health of a company is looked at, and that in itself is really important. So let's shift our attention to the second broad category of methods for analyzing a company's stock price, and that category is called technical analysis. This category of analysis techniques are probably the ones most widely used by traders and investors today, particularly those that have short to medium-term goals. These are the type of techniques that are used by people such as day traders and algorithmic trading systems, which are programmed to trade based on a variety of rules. This also includes traders who are looking to find investments that last maybe as long as several months, but maybe as short as several minutes, and sometimes even less than that. Technical analysis, as opposed to fundamental analysis, gives us a better understanding of what's happening to a stock's price as it's currently being traded right now, or at least in the very recent history. So in keeping with my patient-doctor metaphor, technical analysis is like the doctor taking your blood pressure and getting the results of other labs like your blood glucose, your potassium, sodium, creatinine, cholesterol, your weight, listening to your lungs, looking at your EKG, and all of those other types of pieces of information which tell the doctor what's going on with your body right at this very moment, at least in the very recent past. Technical analysis has many different methods of providing feedback about price movement, and those methods are typically referred to as indicators. And technical analysis has an abundance of indicators. Each of these have unique abilities to provide information about all kinds of attributes of a stock's price movement. If your doctor's medical test results show that you have a combination of very high cholesterol with high blood pressure or high blood sugar, then these indicators suggest that you may be at risk for a variety of health issues in the near term. If your potassium levels are severely out of range right now, then it's likely you have complications going on that really could affect you soon, maybe even on your drive home. If your EKG indicates that you have atrial fibrillation, then you're a potential risk for blood clots to your brain or stroke. Technical analysis indicators are like these types of data for a company's stock price as it moves up and down within the marketplace. It's more of a way of measuring what traders are doing to the price rather than what the company is doing to their own price. In the category of technical analysis, there are indicators and algorithms that calculate things such as momentum of price movement, the speed at which prices are accelerating, the amount of buyers lined up to buy or sell, and a myriad of other considerations. And there's no shortage of technical analysis indicators available out there. The list of common ones that are widely used contain hundreds of them. But just for an example, some of the popular ones that you'll hear about include moving average, exponential moving average, stochastics, MACD, relative strength index, commodity channel index, Bollinger Bands, Keltner channel, parabolic stop, on-balance volume, average directional index, trendline crossovers, Fibonacci levels, and Ichimoku cloud. That sounds cool. That's fun to say. Ichimoku. And again, this is just a few, each having their own purpose and focus on different aspects of factors that affect a stock's price movement. And we can even break down technical analysis indicators into a few subcategories because of what they calculate and how they do it. And just for quick reference, the two common subcategories include leading indicators and lagging indicators. Now, leading indicators use algorithms that try and determine where a price is going in the future and can be helpful during the times when a stock's price is really not moving anywhere up or down. Lagging indicators, however, try to determine if a stock's price is trending upward or downward and if that trend is losing steam or weakening. Within these two subcategories, there are many indicators that are specific for those kinds of tasks. And I won't get into each of them in this video, but I do mention them only so that you're aware that they exist. And for the sake of argument, there are many traders out there who debate about the legitimacy of what we refer to as leading indicators. That is, indicators that predict the future. And this is really an interesting philosophical argument that I'll mention so that you can form your own conclusion. And you can do some research about it, but basically the argument is that since all indicators use data about a stock's price movement that's already happened, then it's mathematically impossible to know where it's going to go in the future, since all the known data comes from the past, even if it's just 1 second ago. I've seen some pretty interesting arguments about all of that, but my personal opinion is that since we can only perform math on price movement data that's occurred in the past, then there's no such thing as leading indicator. Since all the calculations are based on outdated information, it's all lagging. But let me know what you think about it in the comments section down below. So what technical analysis techniques try to do is to identify certain common patterns that happen over and over again during price movements. And from those patterns, we can look back and get a sense of what typically happens after those patterns occur. I'm not a student of atmospheric sciences, but it's my rough understanding that this is basically how we go about predicting the weather. And it's done by looking at patterns of atmospheric conditions in a particular area, and then we evaluate what typically happens when those patterns occur. Does it then rain? Does it snow, sleet, or hail? Technical indicators for stock price movement attempt to read the conditions going on during the marketplace, like weather instrumentation that gathers information about wind speed and temperature and cloud formation and other variables. Then that information is compared to what's happened before when those conditions occur, and then what typically happens after those conditions occur. It's by using these types of technical analysis indicators in the market that we're able to develop algorithmic systems that give us an idea about what direction a stock's price may go when certain conditions are met. Just like weather forecasting, however, nothing is 100%, and neither are technical analysis techniques. But they do a good enough job to at least form the basis of creating ways to recognize when price patterns occur, and then test those patterns historically to see what the probabilities of success were if we respond to them in a certain way. And this forms the basis of what's referred to as statistical analysis. And this is simply the act of researching and validating rules built using technical analysis indicators and then determining whether they may be profitable to trade. This is a topic that's so integral, in my opinion, for the success of anyone trading using technical analysis that I'm currently developing a masterclass all about how to do it, or at least how I do it. I know it sounds really nerdy, but I love statistical analysis because I love the challenge of testing new systems that I develop and then seeing how they might actually perform in the market with real money. So subscribe to this channel so that you can be among the first to see this video when it's done. One last thing I'd like to say about technical analysis is that it works for anything that has a moving price, not just ordinary company stocks. Technical indicators can measure really anything that has a moving price, such as futures contracts, foreign exchange currency pairs or Forex, Bitcoin and cryptocurrency, and so forth. So this makes it a very flexible set of tools for a much wider pool of trading opportunities than just stocks. So now that you have a general understanding of the two main methodologies that most traders and investors use in order to make trading decisions, the burning question then becomes, how does this relate to me? How can I use this to advance my life goals as a trader or investor just starting out? Fundamental analysis is generally useful if you are an investor as opposed to a trader. In other words, you're more interested in accumulating long-term growth and holding stocks for more than a year, maybe 5 years or even more. Additionally, maybe you simply don't have the time in your day or week to sit and watch the market while it's being traded. You work full-time or you go to school or you have other commitments, yet you want to personally make informed decisions about managing your own investments. So fundamental analysis gives you a way to screen through tens of thousands of companies and then evaluate their general state of health. If they meet all of the various fundamental metrics that you're looking for, you may then decide to add them to your portfolio. In doing so, you don't have to babysit them every minute of every day because you're a long-term holder. One of the great benefits of this is that you'll generally have much less stress in your life because you've wisely chosen companies that have good fundamental data and they're likely to be around for a while. All of the great investors generally do it this way. I mean, Warren Buffett, of course, being one of the most recognizable. He definitely analyzes a company's fundamental data and bases a lot of his investment decisions on what he sees there. I'm sure there's many other factors that he looks at, but definitely the underlying fundamental analysis plays a big part. I'd also like to take a quick moment and encourage you to read more about Warren Buffett and how he uses fundamental analysis for his investing decisions. I've included links to a few books down below in my description, which are wonderfully inspiring and educational, and they cover his ideas and thoughts. A must-read for any inspiring investor. Another good thing about fundamental analysis is there are a bunch of free online tools and screeners that will allow you to set parameters of fundamentals that can then be used to find all of the companies that meet your criteria. In this way, you don't have to spend a lot of money or time investing in separate software or boring research. In fact, many brokerages have this type of screening capabilities built right into them so that if you open a trading account somewhere, you can usually have access to all of these kinds of tools built right in. I've also included some links to some free screening tools down below in my description so that you can start playing around and getting the feel for that. If you know of any that I didn't include here, go ahead and share them with everyone in the comments section below. Now, if you're someone who has more free time available to watch the market movements closer, or you want to try to generate income from regular ongoing trading, or perhaps even higher returns that are possible with trading other forms of assets like I mentioned, technical analysis is what you're going to need to be familiar with. Not that you can't use fundamentals along with it, but short-term traders are generally more focused on price movement patterns that can be deciphered and responded to from technical indicators. In future videos that I'm already writing, I'll be talking individually about many of the most common technical indicators that can be used, how they work, how other traders tend to use them, and how people interpret them and so forth. And this also includes videos about how to develop your own personal algorithmic trading systems so that you can potentially have your own computer trading the market for you while you're at work, which is something that I personally do. Let me tell you why I think it's so vitally important to begin to understand and use fundamental and technical analysis. Because I talk to people all the time, friends of mine, coworkers, and others, and they're all getting excited about the ease of opening trading accounts and using them in some way. And I'm just excited too because I think that's great. However, what scares me or really concerns me is that most of these folks are keen to get started so quickly, but they invest and they start trading in things without any reason or rationale as to why they're investing in the stocks that they do. A friend of mine at work was telling me just the other day with great excitement that he invested in some cannabis-related stock and his investment is now up 100%. In other words, he's already doubled his money. And I asked him why he picked the stock that he did, and he had no answer, other than it was something that was in the news. I asked him what his plan was, to hold it for years, or are you going to go take your profit? And he had no idea about either choice. He had no plan. He had no rationale other than it was in the news. Now, he definitely got lucky, and I don't begrudge that. I encouraged him, though, that since he has no plan either way, to take his 100% profit and put it in cash now before he loses it all, because he has no plan for how to manage that trade. Because what typically happens in these cases is the stock price will retreat until they're sitting at break even, but then they continue to hold out of faith until they end up having a big loss on their hands because they had no plan. And this is becoming all too common, and the end result is just bad. And I'm here to encourage every one of you that watch the Joyful Trader channel to get involved in trading and investing. However, at the same time, be knowledgeable about why you're doing it. I want everyone to be able to answer this question. Why did I choose to buy this stock? And not just say, well, I saw it in the news. I want everyone to be able to think for themselves and provide a financial reason why you're investing in what you do. If you can say, yeah, I invested in this company because their fundamental data met my criteria, then you're on the path to being a responsible and successful investor. I can't underestimate the value of using these kinds of analytical tools to base your decisions upon, because when you do, you increase your likelihood of success exponentially over just randomly picking investments from your gut or by watching the news. Obviously, you want to grow your account for the long run and you want to achieve financial independence in retirement. So why not spend the time learning about how to make the best decisions that you can and increasing your odds of success? I mean, you're already taking the time to watch this video, so that tells me you're one of the folks that want to be informed and make good decisions. So I hope I've been able to give you a better understanding of these two main methods for evaluating and screening trading and investing opportunities. This video wasn't meant to dive into the individual terms, what they mean, and how they're used, but knowing about the difference between fundamental analysis and technical analysis, they're key starting points. And I want to say that I really appreciate you spending a few minutes to watch. Here's my question of the day. Of the two main methods of analysis we talked about, which of the two do you think fit into your goals best? I've included a poll up above in the card so we can do our own analysis and see where our group is at with this. Also, go ahead and comment about it below and let me know about any other questions or thoughts that you have. If I can't answer it, I'm sure someone else out there has some insight that can help you. And that's why this channel isn't just about me, it's about you, the Joyful Trader community. I want us all to engage and share in our collective knowledge and post questions and helpful opinions down below in the comments section. We've got a lot more videos and tutorials coming about trading indicators, developing your systems, using software, and other things that help to keep a smile on our face in the process. So as a last reminder, if you like watching our free trading related videos, hit the subscribe button, give this video a like if you learned at least one new thing, and then ring the notification bell so you'll know when each new Joyful Trader video goes live. And as always, this is Dan saying, never stop learning stuff. I'll see you in the next video.